welcome to Bangkok Police International Forum. So let's begin with your perspective on the growth of digital assets. Will it still be leaps and bounds in the future as it has been?
Sure. First of all, thank you very much for inviting me. It's really an honor to be sharing, to be speaking about the future at the International Forum, Bangkok International Forum, Bangkok Post. So to understand digital assets and the future, we need to understand the evolution of money, right? If we were to study the history of the monetary policy, monetary policy actually changes every 50 years. The definition of money is changing every 50 years. We can look at the financial sector into three development phases. We call it Finance 1.0, Finance 2.0, and Finance 3.0. We have been growing up during the Finance 1.0 era, where the fundamental medium of exchange is paper-based, right? That's the fundamental layer. Then we had to have financial services providers with the physical infrastructure to facilitate the physical form of money. So we had bank branches, we have cash machines, we have ATMs, we have armored trucks to move money around. That was Finance 1.0. Then in the last 10 years, in the last 15 years, we have seen the evolution of banking, where we have the arrival of the internet. Right. The money is still paper-based. Money is still fiat currency. That's the fundamental medium of exchange. But at the financial services providers level, we see the evolution of financial services into mobile banking, internet banking, and prompt pay with the arrival of the internet. Right. But if we were to study the definition of money, we used to use shells. We used to use stone, raised stone as money. In the past, we used to use Yellowstone gold standard during 1929, the Great Depression. Then, in 1945, we have the evolution, the new system called the Bretton Woods system, right? The founding of the IMF and World Bank in 1945. Then we have the post-Bretton Woods system in 1971. That's the arrival of the fiat currency, the current system we're using. But if we were to talk about the future, we will see the evolution of Finance 3.0, where the fundamental medium of exchange is no longer paper-based. Right? In the future, money would be programmable. Money would be computer programmed. The biggest economy in the world would not be the physical economy. The physical economy will be shrinking. Digital economy would be expanding at an exponential rate with the arrival of Metaverse, with the arrival of internet from the sky, mobile banking are getting cheaper and cheaper. These are all the infrastructure that will expand the digital economy. And if we were to think about this logically, how are we going to melt paper into the Metaverse world? We cannot convert paper-based money into the digital economy. Money, the format of money has to be consistent with, has to be aligned with the new format of the economy, which is digital, which is metaverse world, right? So at the fundamental layer, money would be computer programmed. Then at the financial services providers, we would no longer need bank branches. We would no longer need ATMs. We would no longer need cash counting machines or armored trucks to move money around. Right? Just like the evolution of the music industry. At the Music 1.0, we used to have CDs and tapes as a physical form of music. Then we had to have blockbusters and Lan Mang Pong as a physical shops to be consistent with the format of physical music. Then we saw the evolution of music to become MP3, iPod, 1,000 songs in one pocket, right? And then we have Music 3.0, where music is now cloud-based. Right? All the music providers are now Netflix, Line TV, YouTube, which is fully digital as a platform business. So it's not something we can avoid. It's the evolution of the world. We are moving into a digital world where everything would be digitized and everything would be run by software. Even at the financial services level, everything would be governed by code. Code is king, since money is programmable. So, cryptocurrency is definitely here to stay.
So will it be leaps and bounds for the future? it will be exponential, as you mentioned so yourself. Uh, so how will it relate to the real economy that you mentioned that is shrinking? So how are they going to coexist, the digital economy, but we're still living in the real economy as well?
So the rules of the games are changing. If we understand the development of the world is not moving in a linear manner. We're moving in an exponential curve, exponential manner. Before COVID world, it took traditional businesses 40 years to grow incrementally every year, 10%, 20% every year. That's when the curve is not really shooting upwards. If you understand the exponential curve, it's not steep yet at the initial phase. But once we hit this inflection point, that's when the world is shooting upwards, right? When we scale, the exponential curve, that's when the rules of the games are changing, right? And post-COVID world, we will see a K-shaped recovery. Those that understand the new rules of the game would be the exponential winner, the shooting upwards. But those that are still sticking to the old rules, right, will become an exponential losers, the K-shape, development. So post-COVID world, we will see a partnership, integration between real sectors and digital companies. Right? As we see, overseas, we see Apple, partnering with Goldman Sachs, issuing Apple credit card. Apple is acting as a front-end customer-facing part on the front-facing credit card. On the back end, Goldman Sachs is acting as a back-end utility providers. Google is now offering checking accounts. They're still partnering with traditional banks to offer, KYC, governance, compliance program. But Google are the front-end customer-facing part. So we will see the transition before the world is fully digital. At this inflection point, we will see more and more partnership between traditional businesses and digital companies. SMEs, that will thrive in the future are the ones that are technology driven, right? We need to invest in R&D into new technology in order to understand adapt to the new rules of the game in order to be the winner again post-COVID world.
Is Thai economy, from your perspective, are we there yet at the inflection point, or how many years from now?
We are already at the inflection point. COVID is a good reminder that COVID is a catalyst. The world is already changing, but COVID is acting as a catalyst to change in the direction of the world. And a lot of companies are changing. Everyone is talking about cloud computing now. Everyone is meeting online, and people are even on the customer's end. The behaviors are changing. As my employees at BitCup, we tried to call everyone back at the office. After COVID, no one wanted to be back at the office. Everyone is used to the new way of work. All the big companies will become a remote-first company. And even consumers, they are used to ordering things online, using a cashless society. So everyone is adapting post-COVID.
Love to hear your thoughts on the price of Bitcoin. This year we see the volatility, from 30 up to 68 down to 56,000. What explain these volatilities, and how do we manage the risks of investing in the cryptocurrency like Bitcoin, for example?
The best way to explain the volatility is to use an analogy. Imagine if Bitcoin is a swimming pool. Then we have an exogenous shock somewhere. Let's say a fat person. When a fat person jumps into a swimming pool, it creates big splash because the mass is small. But once the user base grows, this swimming pool is becoming an ocean. An exogenous shock, if a fat person jumps into the ocean, barely has any impact on the volatility of the price. And this is the basic finance that applies to all kinds of assets. Imagine if gold or US dollars is less and less people are using gold and dollars. This is just an assumption. Eventually, an ocean would become a swimming pool. Then the price of US dollars and gold would be fully, volatile. It's the basic of finance. But as we grow, the number of cryptocurrency wallets are being opened at an exponential rate. For the first 8 years since the inception of Bitcoin, there were 28 million Bitcoin wallets opened worldwide. When we hit on the 9th and the 10th year, just on those 2 years, we created an extra 22 million wallets into an overall 50 million wallets in the first decade since the inception of Bitcoin. But right now we're at 80 million wallets, right, worldwide. So my forecast would be in the next decade, we would hit at least 1 billion cryptocurrency wallets worldwide. We're growing at an exponential manner, meaning that if the user base is growing exponentially, eventually the volatility would drop. This is the basic of finance.
But that's just Bitcoin, but we also have other cryptocurrencies, thousands of them, many new digital assets popping up almost on a daily basis. So how do we select, what's the criteria of investing in these cryptocurrencies? How do we choose?
The rules of the games are changing. We need to understand this first. Let's talk about the stock exchange first. The father of investing, Benjamin Graham, the value investors, right? Warren Buffett used to believe in the philosophy of the last cigarette. He believed that he would invest in any company, regardless of how good the company is. Just if he could see any undervalued company and he could get the last sell of that company. That was his initial philosophy, Benjamin Graham, of value investing. But when Warren Buffett met Charlie Munger, right, he said, Warren, you should not invest in good company at a cheap price, but you should invest in great company at a fair price. And the philosophy is changing, right? But then we have Peter Lynch, the growth investors, and Warren Buffett said you should not invest in companies with a PE of more than 15. That's too much already, too expensive already. A D ratio of not less more than 0.5, right? But Peter Lynch said, but if the company is growing at 30% per year, compounding every year, and are you really not going to invest in a company with a PE of 25? PEG would be less than 1. Then we have the new philosophy of investing as a growth stock investor, right? And then when the internet hits, we have companies like Facebook, Amazon, Tesla, a P of, 1,000, 2,000, and negative returns, right? We cannot stick to the same philosophy of investment. The rules of the games are changing. And when we talk about cryptocurrencies, it's a totally different, asset class, right? We cannot compare digital bonds to stocks to cryptocurrency. We cannot apply the same rules. We have to understand the new concepts. Right. In the past, VCs and investors are investing at the application layer. Stocks of companies, Google, Amazon, Facebook, right? They could not invest directly in the protocol layer, right? TCP/IP, SMTP protocols, because those are open source and they are not scarce in numbers. But with the arrival of blockchain, the relationship is changing. In the past, we have this thing called fat application thin protocol, and people are investing at the application layer, right? Companies, internet boom, bubble, right? But with the arrival of blockchain, we would see a fat protocol thin application, because protocols are now limited in numbers, right? Bitcoin is a protocol. It's a common language for people around the world to speak the same language to solve a single internet problem, right? This is a protocol, the meaning of protocol. Right? So Bitcoin is a protocol for us to send payments and remittance around the world in the same manner. Ethereum is another protocol for us to run decentralized applications. And these are limited in numbers, and all the different applications would be sharing them in the future. Right? And we cannot use the same mindset or the philosophy and apply to a different asset class. So I would say the way to cherry pick which cryptocurrency to invest in, we cannot look at the P ratio, D ratio, discounted cash flow like the past. We need to look at the network effect. Right. I have this question that people have been asking me all the time: why would Bitcoin have any value. It's just money created out of thin air, right? And the best way to explain why Bitcoin has value is to use an analogy of a fax machine. Imagine if I am the only person in Thailand who has a fax machine. What is that going to be any useful for me, right? The best I could do with this fax machine would be a door stopper, right? That's useless. But imagine if every household has a fax machine each, then it's very powerful. We can communicate, with everyone, right? The value of fax is not the machine itself. It's the network of users that grows in tandem with the machine, right? The fax machine. Or, Bitcoin is very similar to internet companies, Line or Facebook. Imagine if I'm the only person in Thailand who uses WeChat. If I send a message and no one replies, is it going to be useful? Even though WeChat has more features than Line. But it's useless in Thailand because all my family, friends, customers are online. The value of Line or WeChat is not from the software itself. It comes from the network effect of users. Facebook too. Why can't High Five or MySpace coexist? We have 7 billion people around the world. Why is Facebook we call it the global monopoly company? Because the value of Facebook doesn't come from the software itself. It comes from a network of users. Same with Bitcoin. If I'm the only one with 21 million Bitcoin, it's useless, right? But if every company started to accept as like a fax machine, more and more countries starting to open up to accept this common protocol to remit money, to send payments on the internet as the biggest nation in the world, internet nation, as a common language to accept this medium of exchange, then the value of Bitcoin would grow. Right? So the best way to look at which cryptocurrency to invest in is to see if the network effect is growing to the equilibrium point that it is a de facto winner. Right? This is a $1 billion question, which
no one knows.
No one knows, because
many crypto will be fading away as well.
Yeah, just very similar to TCP/IP or SMTP in the first 20 years. There were competing protocols until TCP/IP become a de facto for Skype, for Line, for us to see face-to-face online. Or SMTP is becoming a winner for emails, for Gmails, for example. So they are competing in an open source manner. Right? Everyone, it's like DNA mutation. The strongest genes would survive in the long run, and the free market would self-select the winner as a natural winner. A natural selection process would kick in. So it's really hard for one person to just say which one is going to be a de facto winner.
Go by your guts for the moment, or
I would say the biggest the winner, the blockchain that wins in the long run would be the one with the biggest network effect and the biggest computing power, contributing to run the blockchain.
The blockchain, yeah. So you also talk about a decentralization with the emergence of this cryptocurrency, and but we also have the financial institutions, the banking institutions. So how do you see, these institutions adjusting to, this decentralization of all the monetary and, money policy?
Sure. Let me break a bank down for you into 4 layers.
Okay.
So you can understand clearer. The first layer, we call it the value registry or the state of account. Right. Let's talk about Finance 1.0 and Finance 2.0 first. The first layer, state of account, that's when we use a centralized database, right, as a general ledger, internal general ledger to see, how much money we have in each of our customers' account, right? That's the state of account, or we call it the value registry, centralized database. Right? Then we have a second layer, right, which is a unit of account, or the native asset, native token. We call it fiat currency, right? That's when we remit money, sending and receiving the money around is a fiat currency, right? The second layer, as a unit of account. Then at the third layer, we call it the protocol layer. That's when we launch new features of financial services. Then the fourth layer is the application layer, the front-end customer-facing part. Let's talk about Finance 1.0 and 2.0. The first layer is a centralized database. The second layer is a fiat, the paper-based, paper money, right? At the third layer, bank branches, armored trucks to move money around, ATMs, right? We don't even have credit cards in the first, phase, right? Because paper is money. At the, financial services layer, we can do very limited amount of financial innovation. At the fourth layer, that's when customers want to experience financial services. They have to drive to a bank branch, put in the queue number, signing the check, wait for 2 days clearing. Those are the application, customer experience, user experience. That's the finance 1.0. With the arrival of the internet, on the first layer, we are still using centralized database in the last 10 years, right? In the last 10 to 15 years. The second layer, we are still using fiat currency, right, as a unit of account. On the third layer, we have more capabilities or we call it financial innovation with the arrival of the internet. Now we can withdraw money 24/7. We can send and receive money 24/7 with the arrival of prompt pay, internet banking. We have more features now. And at the application layer, we use banking via mobile phone, right? We don't need to visit bank branches anymore. Right? That's the 4 layers of banking. In the future, when we talk about finance 3.0, at the fundamental layer, the value registry or the state of account, we will no longer use centralized database. We will use blockchain as a value registry. The arrival of a digital baht, for example, next year. Right? On the second layer, the native asset. I guess the best way is to use Ethereum blockchain as an example. The first layer is this Ethereum blockchain as a decentralized ledger, not a centralized ledger, to register value as a state of account for each of the customers around the world. On the second layer, we call it the native asset or the native coin. We will no longer use fiat currency, but we will use Ether as a native or digital currency, which acts as a unit of account. Then on the third layer, since money is programmable, we're using programmable money on the second layer. Then on the third layer, the features, the functions of banking or financial innovations, pretty much limitless. We can program anything, subject to the imagination of human. Right? We can program anything since money is programmed. It's a computer program. Right? We will have an open source. We call it open financial system at the third layer, the protocol layer. I guess the best way, let's use another analogy on the third layer. Imagine mobile phone. We used to use Nokia 3310. Innovations come from the top down. CEO orders everyone, and said, a Nokia phone, you can call, you can send messages, and you can play snake games. That's a closed loop system. Innovation comes from a closed door meeting. Then we have a second generation of mobile phones called iPhone. Right? That on the third layer, it's an application store. Steve Jobs doesn't have to say, guys, iPhone, you can order a taxi with an iPhone. Right? You can send money with an iPhone. You can order food with an iPhone. Innovation comes from anyone, anywhere in an open system. That's the new generation. iPhone changes the world, not Nokia. An open system changes the world, not a closed loop system. Innovation doesn't come from a closed door meeting. Right? Same with banking. With money being programmable, financial services will not be coming from a closed door meeting. Not a few people, will be, telling everyone, what we can get access to in terms of banking. Innovation would come from anyone. It comes in a computer program, in code, and in an open source manner. Meaning that at the fourth layer, mobile banking app, banks can pick and choose which open source protocol they can allow into their apps for the customers to access in without developing the services themselves. Imagine we can lend money and borrow money without an intermediary, using a smart contract, using a DeFi. On the third layer, we call it decentralized finance, right? An open source, open financial system. Right? We can borrow money, lend money without an intermediary. We can crowdfund, without an intermediaries. We can exchange between digital baht to digital yuan without a centralized body. Everything would be governed by code because money is computer program. That's the protocol layer. And on the fourth layer, application, that's when customers, front-end customer-facing part. We could have meta bank in the future.
Meta bank.
Right? We could have, it's just customer experience, how customers access banking. That's the fourth layer, the application part. We could have a financial platform layer. As we have a media platform like Facebook, as we have real estate platform like Airbnb, as we have TV platform like YouTube. In the future, we would have financial platform, right? As a front-end customer-facing part on the fourth layer. Or we will eventually have a meta bank when everyone is on the Metaverse layer. But they're still tapping on the third, second, and first layer.
So what will become of all these institutions, the physical assets that they are functioning at the moment?
Look at the music industry. Right? We can listen to music without touching tapes or CDs because music is programmable now.
Yeah.
We have programmable music. If blockbusters would stick to branches, then they're not going to survive, right? Because the next players would understand the new rules of the game, right? That music is no longer physical, right? The arrival of Netflix, Line TV, and YouTube has a market thesis that are more relevant to the new rules of the game. Right? So same with banking. There will be less bank branches. There'll be, next year when the arrival of the digital baht, ATMs are the first to go. ATMs, bank branches. And even the ratio of employees within the bank, you can see a clear turnover between traditional bank tellers, less and less traditional bank tellers, more programmers, more engineers now. Even the internal ratio of types of employees are shifting internally.
Is quantum computing a threat to the cryptocurrency?
Quantum computing is a threat to everything, not just blockchain. Right? Moore's law states that the computing power is doubling every 2 years, meaning that quantum computing would be ready from today in 12 years from now. Right? 12 years from now. Assumption is if the computing power is doubling every 2 years, right? 12 years from now. And the answer is yes. Right? Quantum computing would break blockchain. There are two parts that quantum computing would break blockchain. With the digital signature part, we call it the elliptic curve. This is quite technical. But with the arrival of quantum computing, and we use Shaw's algorithm to reverse the public key, right, and the digest to see the private key of the wallet, then it's vulnerable. Or we can use quantum computing with the Grover's algorithm to make sure that the cryptographic hash function doesn't work. Right? We can reverse the engineer to find the internal, the R value. It's quite technical, but to answer your question, yes. Blockchain would be vulnerable. Same with banking, YouTube, nuclear power, everything.
So that doesn't sound good for the cryptocurrency growth, right?
And other industries. We need anti-quantum technology, which at the same time are being developed in tandem.
Digital baht that you mentioned just now is going to be introduced next year. So how will this change the landscape of Thai financial structure?
There are two models to creating a centralized central bank digital currencies. A one-tier system and a two-tier system. For a one-tier system, which is not Thailand, by the way, is when central bank issue a retail central bank digital currency directly to retail customers, bypassing retail banks, bypassing commercial banks. But not in Thailand. We're using a two-tier system where the creator of digital baht is the central bank, which retail customers have direct claims. You can have a direct claim against the central bank. But the distributor of digital bahts are still retail banks and eventually non-banks partners. So by next year Q2, there will be two accounts coexisting. A fiat currency account, with the retail banks and a digital baht accounts, which is a non-interest bearing account because the central bank is scared of bank runs. So we will have two accounts happening in tandem. And with the digital baht accounts, we can have financial creativity, financial innovation at that account. People can program digital baht on the smart contract layer, and we can automate so many financial instruments or interactions, and it would increase the velocity of economic activities. The Keynesian economics said MV equals PY, right? When we want to increase the GDP, either you increase M, the money supply, or you increase V, the velocity of money. With the arrival of digital baht, we're not increasing the M because we risk facing inflation. But when money is fully digital, we increase the V. Imagine if the same amount of money, but at a 10 times turnover, then the GDP would grow, and we would have less, deadweight loss in terms of money laundering and tax avoidance. Those things we cannot, that cannot happen with digital baht in the future. So we will reduce the deadweight loss as well as increasing the velocity of money. And retail banks are here to stay. They just have more instrument to play with. Right.
So digital baht by the BOT, and also we also heard from the central bank, the BOT, the Bank of Thailand, about its stance that they're not supporting digital assets to be utilized in the real world. What's your take on the stance of the BOT about that?
Because I understand them, because the definition of money in Thailand was last changed in พ.ศ. 2475, like 79 years ago, even before the arrival of the internet. So when we have this new protocol, new instrument, it doesn't fit to the previous criteria definition of money created 80 years ago. Right? So that's why Bitcoin is not classified as money in Thailand. And when Bitcoin is not classified as money, then the central bank cannot have rules, power to regulate the space, because Bitcoin is not money. Then we call Bitcoin, right? We call it asset, but we cannot touch it, so we call it digital assets in Thailand. And now it's under the SEC regulation. The current regulation of digital assets are under the SEC. And central bank is the only entity in Thailand that has the power to create money, which the retail customers have direct claims, right? Private companies or common man cannot create a competing currency. As their role as the central bank, obviously they cannot promote an alternative currency, because they are the only one with the power to create money that has direct claims in the country. So as a role, when they're wearing this hat, they cannot promote other competing currencies, because the definition of money changes, I don't know, 80 years ago in Thailand. But can you avoid this? That's another question. Right. You cannot stop the world from moving forward. The biggest economy in the world is going to be digital in the future, right? Because the rule of the games are changing, exponential scale. The biggest economy will be digital, and also Metaverse. Facebook is so serious that they are throwing the Facebook brand away. Right? I would say the Facebook brand is in one of the top 10 in the world, where everyone already know what Facebook is. And they are throwing that brand away and changes to Meta. They show serious commitment about Metaverse. And they have 3.3 billion people, half of the world's population in that network. Right? So Metaverse is going to come much faster than we think.
How do you visualize it? Maybe you're in the better position to walk us through what's going to happen with the Metaverse. How is it changing the business landscape?
So the computing power is doubling every 2 years. Initially, we were able to communicate via text, right? Letters and text. Then when computing power improves, we are able to communicate via photos. And then eventually, we are able to communicate via videos now. But in the future, we will be able to communicate via hologram, right? In the future, I don't really have to be here. I can hologram to be here, right? And that's when the computing power is moving at an exponential manner. Right? It's here to stay. Right? It's gonna happen eventually. And the mission of Facebook is to connect people, right? And they are improving the way they connect people via text, via photo, via video, and eventually via hologram, right? And how can we melt paper money into this hologram world? The format doesn't, make sense. When everyone is on Netflix, on Line TV, on YouTube, nobody is going to be using CDs, right? Tapes, MP3. The format has to be consistent. So cryptocurrency is the future of money. That are, the format is consistent with where the world is going. Digital, and even the way we do businesses. We have been talking about globalization, digitization in the past. But if you are to dig deep, what is globalization really is? Right? Globalization is when we allow free flow of people. Right? What is digitization? Right? If you digitalization, if we dig deep, digitization is really when we allow free flow of information. But the last part is arriving today, right? The last part, which is to allow free flow of capital. Right? Cryptocurrency or digital assets will allow free flow of capital. Once we have free flow of people, free flow of information, free flow of people, that's when digital economy will take off in an exponential manner, which is today, right? At the inflection point.
Inflection point, yeah.
So Thailand needs to understand these new rules of the game. Otherwise, we will stuck in this middle income trap. Right? We have made mistakes in the past. When the internet first arrived, free flow of information, we were scared of the internet. We cannot control information. Let's use intranet and firewalls everywhere. But what changes the world is an open system, not a closed loop system. Right? We allow companies like Facebook, Google to foster in the US. With Facebook alone, it's bigger. One company is bigger than all of the companies in the Thai stock exchange combined. We already made that mistake. With the arrival of this free flow of capital, blockchain, Metaverse, we should not make mistakes again. And if we have the right policies, we would correct the previous mistakes in the last 50 years because we are growing at an exponential manner. With my company, for example, we have been around for 3 years and 10 months. We are able to generate revenue to the same size of a small bank already, who has been around for 100 years. Same with Alipay or Tesla. Right? Tesla with one company is now bigger than 10 biggest car makers, car companies in the world combined. Toyota, Ford, Henry, General Motors combined. Right? And Tesla has been they have not been around for 100 years, 70 years, 50 years, not even 30, not even 20 years, 17 years. So the world is growing in an exponential manner. Once we understand the new rules of the game, the winner would win big time. So as a country, I think we need to really focus and understand that what is the rules of the new world post-COVID. And once we master the rules, Thailand would grow like crazy.
You mentioned about the decentralization that came with the blockchain and the cryptocurrency, and you also mentioned that all these institutions are here to stay as well, but they are changing their functionality. So will it be a loop? Will it go back to being centralized again? Because we have a barrier to entry, and we have all these big players in the market.
We have to talk about understand different layers. If you talk about the fourth layer, the application part, that's the centralized part. And it's going to be a winner takes all, right? Business model. If you look at other industries first, before banking, look at communication or media industry. The biggest media company in the world is Facebook. They are a platform company, media platform. We call it a media platform.
Media platform, yeah.
They are the biggest media company without owning a single piece of media or news reporters themselves, right? But they are the biggest platform. They are acting as a bridge, and they resist the temptation to do either end of the products or services themselves, but they allow free flow of information. Look at Airbnb, a real estate platform. With only 11 years, they have more rooms, hotels rooms than Marriott, who's been around for 4 generations. And now the valuation of Airbnb is 4 times Marriott. Right? The biggest real estate platform in the world is Airbnb without owning a single hotel themselves. The market thesis is changing. The biggest taxi operators in the world is Uber and Uber and Grab without owning a single taxi themselves. Right? The biggest shopping centers in the world is Amazon, Alibaba without owning a single buildings or inventory themselves. What is going to be the biggest banks or financial institutions in the world? Right? The biggest financial institutions in the world are going to be the ones with, without owning the capital themselves. Just like how Facebook is becoming the biggest media company in the world without owning any media themselves. They allow free flow of information. Airbnb, without owning hotels, they allow free flow of people. The biggest institutions, they will allow financial institutions, free flow of capital, right? Yep. And it's going to be a winner takes all. We call it a global monopoly company or a local monopoly company. Facebook is a global monopoly company where High Five and MySpace cannot coexist. And Thailand's too late to build Facebook for Thailand. That's what we should talk about 20 years ago, right? Alibaba is a local winner. It's a local monopoly for China. Amazon had to leave the country. They cannot coexist. Amazon is a local winner in America. Amazon alone is bigger than all of the e-commerce combined in America. Other e-commerce combined. They are a local monopoly winner. In Thailand, we used to have this war between Grab and Uber. If you remember this.
Yes.
Uber had to leave the country. And then we had this fight between Grab and Gojek. Gojek had to leave the country. They cannot coexist like traditional businesses where we have thousands of them. It's a winner takes all. Have you noticed why Lazada or Shopee, they're burning like 3 billion, 4 billion baht every year? Because we don't know who is going to be the winner yet. They cannot coexist. One has to die, right? We don't know if the winner would be Shopee or Lazada, but there currently would be one, Amazon of Thailand. But those companies are non-Thai. Too late. We cannot use, create line of Thailand. That's the conversation we should be discussed 10 years ago, right? Because of the network effect and the economy of scale of the platform players that money cannot buy. I can give you unlimited amount of money, but you cannot build another Facebook. Right? How can you migrate 3.3 billion people at the same time too? Because of the network effect. If you migrate some, the others are still at the old platform. It doesn't function. Right? Then people would move back to the old platform.
So is that financial institution taking place already? The one that you mentioned, the biggest one in Thailand?
So if we open our phone, all of the apps are foreign. Airbnb, YouTube, Netflix, Line, right? Gojek, Grab, Traveloka. The only app that Thai customers are still using is a financial app. We were too late to create Facebook of Thailand 20 years ago. We were too late to create Amazon of Thailand, right? 10 years ago. But we're not too late to create a financial platform for Thailand. Right? We need to have a financial platform that eventually will become a winner local monopoly for Thailand first. And then we will go to other countries and make sure we win in other countries to be a national champion. Like how, Grab is a national champion. We call it the scale-up company, not startup scale-up. Right? Grab is a national champion for Malaysia. Gojek is a national champion for Indonesia. We need to have a national champion for the financial sector, which is not too late yet when we open our phone. Right? We're still using a Thai-based app for banking. Right? Once we have a winner, a local monopoly, we cannot coexist. In the new types of business models, network effect and the economy of scale. Once you have a local winner as a national champion, we should go to other countries and make sure we win. countries and migrate the money back to Thailand because we are losing money every year. And these apps that have been all these foreign apps, they don't really pay tax and all our data is overseas. Data is more expensive than oil now. Right? So we need to really time is running out.
Oh, it's been a pleasure talking to you คุณจิรยุทธคุณ Top thank you so much ขอบคุณมากครับผม a big round of
Thank you
applause for คุณ
ครั
Top
บขอบคุณครับ
for sharing his thoughts and a wonderful vision. May I invite Kun Vorachai back on the stage to present the souvenir. Yeah, ตรงกลางคุณจิรยุทธทรัพย์ศรีโสภา founder and a group chief executive officer BitCup Capital Group Holding Company Limited. Metaverse paper คุณวรชัย mentioned yes ขอบคุณมากครับขอบคุณทั้งสองท่านนะครับ Thank you very much คุณจิรยุทธ and คุณวรชัยขอบคุณมากครับ